When we have some Sanjeev Bikhchandani on ET now, I just struggle to find the right introduction. Some like to call him the father of Indian startup. Some like to call him the visionary of Indian startup. But it's the startup world, and the fashionable word to really describe a startup mentor is OG. So we'll introduce Sanjeev Bikhchandani as the OG of the startup. I think that's a good introduction to have. Makes you sound young and yet experienced.
When you say father and OG, it makes me actually very old. But thank you.
Thank you for joining us. Lot of excitement in the startup space. I mean, the startup space now is occupying the center stage now. From big deals to big valuations to startup companies going public, Zomato being part of the Sensex 30, a lot is happening there. Do you think in this year, which is 2025, the acceleration, the growth, the deal making and the excitement will continue?
So the deals were always happening. Valuations may have got a little muted, in the last couple of years after 2021. Uh, because the market had been overheated before that, frankly. But the deals were always happening. Maybe the round sizes are muted. Maybe investors are more discerning, slightly slower, slightly cautious. But all that is good, I think. It is good for a market to get some discipline.
Mr. Bikhchandani, the startup community in a sense has also got a lot of global and lot of venture money. We are staring at outflows in the equity market. Do you think it's a matter of time they could also hit the private market, and especially global growth capital which is coming in the startup route via the P fund, via the capital market route, that also could take a hit?
So in general, private markets follow public markets when there's a correction by about lag of about 6 months, 9 months, right? In general. Having said that, if there is money that's committed to India private markets, that money will stay. It won't go away. It is a discretionary money, which can go private or public, which can go India or China, which can go India, other emerging markets. That is what may ebb and flow. So yes, it could happen, but there's some money that is committed and that will stay.
But you
And
don't.
that money is fairly substantial, the money that's committed.
So what's your sense? I mean, how much money could really come into the startup world or into the startup companies in this year?
I don't know the number, I can't predict it, but देखो last year कहते हैं कि $14 billion लगभग आया था, उससे पहले 11 था. So it's gone up by 3 billion. Prior to that, it was much higher in 2020, 21, 19, 20, 21. So will we go back to the 2020 days? I don't think so. But can it stay at this level or be marginally higher or lower? Answer is yes.
And again, just to get a follow-up question on that so that we don't get this one wrong, the reason why I ask you this question is that we've seen outflows in the public market. FIs have been selling, they were net sellers for entire 2024, they've been net selling in 2025. Do you see the reversal also could happen where companies which have gone public or investments where funds are closing down, the flows may actually go back?
It could happen in some cases. You see, if the public markets are correcting, and there are some stocks which may have gone public recently, which they may also see a correction. We have seen that happen. But having said that, understand one thing that I think somebody was giving me a number. I think more than 17 new age companies have gone public in the last 12 months. And that's quite remarkable because India is the only market in the world where this is happening. And therefore, it's actually a very good thing for Indian startups that investors and companies are getting public market exits.
Mr. Bikhchandani, I'll just like to remind our viewers here that Mr. Bikhchandani and his firm, when they started investing in the startup world in a sense was an unknown word. Now it seems to be enjoying a mainstay. From public investors to sophisticated HNI investors, all of them are now investing in the in public companies now. So the reverse question, Mr. Bikhchandani, can I say that now just like Indian public market are getting a lot of flows via the domestic investor, lot of startup companies in India could also start getting inflows from domestic investors, HNI investors, and ultra, big retail investors?
So domestic capital going into startups is increasing, but still 85-90% of risk capital in India is from overseas. And that is something the government is trying to correct, but we need to do more of it. They started the SIDBI Fund of Funds for Startups. I was in the first investment committee there. And I think they did a great job. 10,000 crores committed, 9,000 disbursed. it's a pretty good track record. The government needs to top it up, and I'm hoping there's a top up in this budget.
What can be done on the taxation front? And you said that I hope we see some changes in the budget. So what is that you're hoping to see this budget?
One is I want to see top up in the SIDBI fund of funds, go into early stage venture capital firms. Second, we are hoping that the ESOP taxation gets more employee friendly. I think that's important. Right now, ESOPs are taxed on exercise and not on sale. So you have situations where employees pay tax right now on the exercise ESOP, but the stock is not liquid. They may have to sell 5 years later. Or the company may still go bust, but they've paid the tax and that tax is gone. So that's a cash flow issue for employees. Third is I'm hoping that, look, ESOP is allowed for independent directors. Startups find it hard to get good independents. They can't pay the salaries, the fees, and ESOP for independent directors used to be allowed till around 2010. Then it was removed. So I'm hoping that some incentives to get good independent directors for better governance are introduced.
Do you think the ease of doing business, while there is some progress on that, do you think a lot needs to be done and the startup world still feels that a lot needs to be achieved when it comes to ease of business?
I think that's for all businesses, not just startups. But yes, we need to make doing business simpler. You have to dismantle the Inspector Raj. And that is kind of hard because it goes down to states. Different states are different. It goes down to even district level officers. It goes down to multiple sort of compliance authorities. But yes, if we can dismantle or substantially simplify the Inspector Raj, I think it'll go a long way in improving velocity of business.
Mr. Bikhchandani, startup by definition means high growth, low base, future ready, and a business which is built around technology. So if you have to identify, like you identified aggregation business in insurance sector, food delivery business when you identified Zomato, which to your mind are the high growth small areas which are small today, but potentially they could be large, big and mega in next 10 years?
So we see stuff bottom up. We meet 1,000 startups a quarter. We invest in 2 or 3. We do not sort of do it top down and say this sector is looking good, that sector is looking good. We just look at good companies, good founders, good entrepreneurs. But in general, one trend we see is that AI is going everywhere. So AI is something that is going everywhere, and it will have a huge impact on all companies, big, small, and startups.
Okay. There is a lot of excitement in what is happening in the quick commerce space as a consumer. It has changed our lives. But when something good happens and then something disruptive happens, what is good for consumer is never good for shareholders. So do you think we are going through that phase while quick commerce is a welcome move, but it could come at a cost where shareholders could suffer in the near term?
But first of all, let's understand quick commerce and e-commerce is only 4, 5, 6% of total commerce. Okay, so it's still small. Second, and it's growing fast though. Second, we are hoping for rational behavior by all players, which basically means you're pricing at a point where you are making a positive margin and a profit. If money becomes very easily available, founders can often get, commercially imprudent. That's something we are hoping does not happen.
Where do you think quick commerce may not work? For example, it has worked brilliantly in groceries. It has worked brilliantly when it comes to, if you are trying to identify a solution to beat the traffic and convenience. Do you think this entire extension of quick commerce where you're getting apparel, refrigerators, laptops, and even laptops delivered, do you think that's not going to sustain?
No, it might sustain. All I'm saying is that there will be many players and offline will still remain a larger chunk of it. See, there are many Indias and all Indias will coexist.
Before I wrap, everyone I've interacted with in last 3 or 4 days had the following thing to say. Either they have gone to Kumbh, or they went for the Coldplay concert, or they ran for the Mumbai Marathon. Where did you go? Kumbh, Mumbai Marathon, or Coldplay?
None of the above. But I'm working on with DPIIT. There's a whole team working on the Startup Mahakumbh, which is happening in April.
So it's not. So it is not the Mahakumbh. It is a Startup Mahakumbh, but Kumbh nevertheless when it comes to you.
Absolutely.
Appreciate your time, sir. Thank you very much for joining us and best wishes for a great 2025.